Back with our part 2 of the how to swing trade videos. This time we'll be talking about picking our stocks that are in play, choosing that one stock to swing trade, and also our entry and exit strategies. Make sure you check the part 1 video out in the description link below. Now that you got your swing trading watch list ready, you can look for stocks that are in play. By this I mean stocks that are set up for a good swing trade. There are 3 characteristics that I look for to know if a stock is in play. The first one is upwards momentum. You'll never see me swing trading a stock on a downtrend. Trying to buy the dip and time the reversal is very difficult. Your odds are much higher if you just buy a stock on an uptrend. And looking for a stock that shows good upwards momentum, you want to see that the stock is breaking its resistance or its highs more often than it's testing and breaking its support. On top of that, we also want to see that the time it takes for the stock to get from its support to its resistance is a lot faster than the time it takes from it to get from its resistance to its support. Here I have 2 examples of stocks that are showing good upwards momentum. On the left you can see I have Apple, and one you can see here that the stock is moving higher with its supports moving up and its resistance moving up. Support has rarely broken on Apple, while resistance has been consistently breaking. On top of that, you can also see that for it to go from its resistance to its support takes longer than for it to get from its support to its resistance. This is showing that it has good upwards momentum and that it will likely keep going higher. We see the same thing here for Roku on the right. Its support consistently keeps going higher and its resistance or its highs keeps breaking out. On top of that, you can see that the time it took Roku to get down here to its support took around 7-8 days, while the time for it to get back up to its new highs or to its resistance took only 3 to 4 days. This shows that the stock has good upwards momentum and that it feels safe for a good swing trade. The second characteristic we're looking for is a gapping pattern. We want to see that the price of the stock tends to gap between the close and the open of the next day. Specifically, you'd like to see the gapping pattern occur off of a green candle on the daily chart of a stock. This means that the gapping pattern is occurring on a stock where its closing price ends higher than its opening. The chart on the left here, you can see the stock Chevron, ticker CVX, is showing a great gapping pattern on its daily chart. Every time we have a green candle, we see a gap. While on the right here, stock Virgin Galactic, ticker SPCE, the dailies aren't looking too good off of green days at least. Every time you see a green day, it has failed. A few times it does gap up, but overall in its last few months, you can see that it has been failing pretty consistently, or at least back and forth off of a green day. So the fact that we see it's failed a couple times in the past shows that this stock currently is not showing a good gapping pattern. The third and final characteristic you want to see stocks in play having is a strong history. By this I don't just mean a strong history off gapping off of the green dailies, but also a strong history of good fails off of green dailies. On the chart on the left here, you can see that the stock American Airlines has been showing a great gapping history. So far, it has been gapping off of these green candles every day, all the way since back here, almost 2 weeks from its current position. And when it has failed, it failed by about 1% or about 0.5% or more. While when it was successful off of these green dailies, you can see these big gaps giving 6%, 1%, and sometimes even almost 2%. So because you see these good gapping patterns off a majority of these green dailies, this has a strong history. While on the right side, Nvidia, you can see that yes, it has gapped a few times off of these green candles, but at the same time it has gapped down even more off of green candles. Its history has been showing that off of these green dailies, it has gapped down more consistently than it has gapped up. And when it has gapped up, you see about 1.5%, and when it gaps down, you get losses of 3% or more. So risk to reward, this gapping history is terrible. and you should wait for the stock to show a strong gapping history like it did on this day consistently. Now that you know which stocks are in play on your swing trading watch list, it's time to pick one. I personally recommend swing trading one stock at a time just because it makes it less complicated with your entry and exit, and also I just find that my first or number one pick ends up being the best one, and I end up just wishing I went full on that one pick. With choosing that one stock to swing trade, there are really only two things I look for. The first and most important thing that you gotta see, or that you wanna ask yourself, is which stock has the best current data. By this I mean which stock is currently showing the best gapping pattern off of the latest green candle, or which stock is showing the best momentum compared to the overall market or compared to the other stocks you would like to swing trade. Here we have examples of two stocks that are in play for a swing trade. On the left we have American Airlines, which is showing the better current gapping pattern. If we take the last green day on American Airlines and see where it went the next day, it gapped about 1.15%. Well, on that same day, on the right here we have Chevron. You can see that it gapped about 0.2% off of a green day, not nearly as much. Well, if you look further back one day, American Airlines gapped about 0.3%, and Chevron gapped about 0.6%. So while Chevron has gapped better than American Airlines in the past, currently American Airlines is gapping better than Chevron. While Chevron, on the other hand, has the better momentum, at least better momentum currently. If you look at the resistance, Chevron has been breaking its resistance consistently. Every week you can see it's been hitting a new high and pushing up on its resistance, while American Airlines, having good momentum, still is showing more resistance and less upwards momentum in compared to Chevron. Although both look great, I would still recommend trading American Airlines just because I think a more important gapping pattern matters more than the upwards momentum, although both are still very important. The next thing you want to consider in choosing your swing trade is safety. You want to make sure that the risk you're taking on this trade is much lower than the reward you're expecting to make. Most times, I expect to make double of what I am risking. Here I have two examples of stocks that are showing good gapping patterns, but also have high risk at the current moment. You can see Tesla, off a good green gap, will get about 1.7, a little bit over, but then off a bad green gap, where it fails, you get about a loss of about 2.2%. This one, we got a green gapping up of about 0.9%, and this one failed back about 2%, even more. So you can see that sometimes it'll go up off a green day, and then other times it goes down, and it's about the same, sometimes even more the risk than the reward. Same thing you see here with Facebook, right? Off of this fail, it lost you about 1.7%, but this day it went up, right? You got about 1.1. This day it went up, you got about 0.5%, and this day you won about 1%. You see some good days, but then when it fails, a loss of about 0.7. This loss was about 1.4. So you see the risk is about the same as the reward. So these two trades, while at the moment gap well, I would not take them until I start seeing the pattern start to change and these fails to go away, or they get a lot smaller. Last thing I want to add about safety is that it shouldn't be something that's so important at this point. With picking your watch list, you should have already picked safe stocks. If these stocks are very risky, then they shouldn't even be on your swing trading watch list. Safety should not be the main decider in choosing your swing trade. A lot of times when you pick the safer trade, or you pick the one that will risk a lot less, it ends up paying you less and sometimes even giving you a higher loss than you would have taken if you just picked the better trade. Now that you have picked your stock to swing trade, it's time to pick your entry and exit. With this, I really recommend giving yourself a little freedom of choice. You can take my recommendations of how I like to enter and exit, but honestly, if you find a strategy that works better for you with your entry and exit, go work with it, or hold a little longer if you like, because I don't typically hold that long. What I like to do is enter right around the close, giving me a nice setup with the candlesticks that I see on the daily. That way nothing can change in the last few minutes and change the setup. With my exit, I always get out in the early morning. I like to get out in the pre-market near the open, but I typically do not hold that much longer after the open. So here I have an example of why I like to buy near the close. So you can see that Tesla on 3.9 was showing a nice gapping pattern off a green daily. You saw it gap about 4%. And I remember looking back about half an hour before the close on this day, 3/11, to show you the 5-minute chart so you can see here. On 3/11, half an hour before the close, it was starting to hold a little bit higher. And it wasn't much higher, but because the daily was so close to that opening price, you would see a little bit of a green hammer, right? And I thought it looked pretty good. I thought it was a green hammer, not that great of a tail, but still looked like a good green hammer, seeing how it gapped last time. Well, in the last 5 minutes or so, you can see that on that day, right, it pulled back a good amount, and looking back at the daily again, you see it end as a doji. And because of that, I decided not to hold Tesla, pick a better trade, and look at what happened. Next day, opens down 1%, sorry, not 1%, 4%, 5% almost. So you see that big gap down. My goal with my swing trades is to make at least 1% with each trade, being successful 4 out of the 5 trading days in a week. 1% may not seem much, but with compound interest, 1% a day will allow you to double your money in just 70 days. This is how I've been able to grow my trading account so quickly. I am now at the point where 1% offers me thousands of dollars in a swing trade. If you find yourself negative on your swing trade or not at the expected exit, I'd recommend exiting when the stock starts breaking below its support. That's typically a good sign that the stock's going to keep going lower. With these trades, most of the time I'd recommend just taking profit whenever you have it. This especially has worked well for me with this strategy, and that is why I cover early in the pre-market. I hope this tutorial has been helpful for most of you out there. If you want to get my swing trades and also learn more about swing trading, join the Discord server Sleep Easy Trade. You can find the link in the description below.